Well, hello YouTube, Louie here. We're going to go ahead and take a look at the price of precious metals around the world and see what is going on with gold and a little bit about silver, plus some thoughts I've had recently and what I'm doing. First of all, for those who are following, I believe today is the release of the U.S. Mint reverse proof palladium eagle. Really expensive, around $2,000 and double the mintage. I will not be touching that myself. All right, moving on. Let's take a look at where we're at this morning on, or where we were last night on 9/11. The charts that I'm presenting were all printed last night on September 11th. This morning, I think on the 12th, I believe silver is up a little bit. But as of the point that I did this video, I think we were, a little over $18 on silver. And we are currently popping back up, trying to get back up into that 19 range. Gold is at $14.97, trying to pop back up. It may be over 1,500 this morning. And I am presently waiting to re-enter some positions, but not in the 18s. I'm expecting there to be another drop, so I am holding patiently, and it could possibly take a week or two or three. But I'd like to see my next silver purchase be down in the low 17s. So that's what I'm hoping for. We'll see if that happens. If you don't have any yet, silver, gold, platinum, you may want to start averaging in, because these are not bad prices. But again, I'm expecting a little more pullback. That's just me. You go ahead and give me your thoughts if you think it's straight up from here. But not sure. There's a lot going on in the markets. Let's go ahead and start looking at gold. As I said, gold is right around that magic $1,500 level. I think it's a bargain at that price. But let's see what's going on around the world. All right, in no particular order, let's start with India and the Indian rupee. And we have had a little pullback, as we have had in the United States, currently sitting at about, 106,500 rupees. So breakout occurred right around 100,000 rupees, and now sitting at 106.5. That is probably going to represent a bargain. If I were looking at this move and looking for an entry point, well, I like to keep it simple. So what I would be looking for is an entry point somewhere between 112,000 and 100,000, right around, well, let's see, the breakout occurred at about between 100,000, and then the top was 112,000, I believe. That's a 6,000 variance. We are right in the zone to where we could, you could definitely start buying again. Three big red candles would indicate some further weakness, but I would think that somewhere around the 104, 105,000 be a good entry point for the rupee. Let's keep moving, guys. All right, here we are. Let's see. Oh, this is in US dollars. So as I said, we're at about nearly 1,500 here on gold. It's trying to push back up, but I would expect, a logical entry point to be back, 1440 or so would be safe, I think. Let's keep moving. Gold in the Chinese yuan. All right, so perhaps the Chinese will stop devaluing their currency, but they are indicating tremendous weakness in China. And they are going to be introducing a new round of stimulus, which means the yuan is not where you'd want to have your money if you live there. If you're able to get out of the yuan and into gold, good for you. So this is just on fire here with a move in the last, let's see, July, August, September. In 3 months, it has gone from about 8,700 up to about, 100 up to currently sitting at about 10,583. So that's a pretty massive move in the yuan, and there could be further weakness here, but If I were in China, I'd be thinking heavily about gold right now. Hold on one second. All right, just wanted to compare the yuan to the US dollar, and you can see why it's been making that move ever since April. A devaluation of the yuan to the dollar from 0.15 down to a low of about 0.14, and now about 141. So that's partly why that's moving, but also because gold has broken out. And well, there's the chart. There you go. Hold on. All right, back to the price of gold. This time, I haven't done this one before, in the Swiss franc. All right, I believe the Swiss franc is one of the stronger currencies in the world, but gosh, I could be wrong about that. Why don't we go take a look at the currency, because this move since, what is that, since about May, from 4,300 Swiss francs up to 4,800. That's a pretty good size move. I just want to take a look quickly at the Swiss franc compared to the dollar. All right, for those of you with your money in Swiss francs, we can see it has been pretty stable over the last year, but we have had a decline in the last few months from about 1.03 francs to the dollar down to about 1 even. So about 3% depreciation. But still, that move in gold looks pretty similar to the U.S. move in gold, since the franc seems to be a pretty stable currency. Let's take a long view of the franc. Yeah, very stable currency, and that's why people put their money over there. But things could be changing. All right, hold on. All right, here we are with gold to the Japanese gold and priced in Japanese yen. Boy, not even hardly any weakness in the yen with the pullback in the United States currency. In the United States prices, barely a pullback at all in the yen, up at 161,000 and change yen for gold. And that is a very interesting chart, really solid breakout. And I believe the yen has been devaluing as well. Let's take another look at that. All right, here is a 1-year chart of the yen versus the dollar. And actually, the yen has been strengthening against the dollar over the last year until just recently. What is that, right around August? We've seen a major dip in the yen, a pretty substantial drop. So that could be why while gold was dropping, the yen was also dropping substantially. So that's probably why you haven't seen the pullback in the yen as significantly as you might. I don't know what is causing the yen to devalue just recently. If you do know, are they entertaining even more quantitative easing? Anybody who knows about the yen, please post below. All right, here we are with gold in British pounds, sitting at about 1,211 pounds sterling to buy an ounce of gold, a troy ounce of gold. And this chart looks like it has a little ways further to drop back. The Brexit stuff is without a doubt very interesting and is playing on this market, as is the devaluation of the pound versus the dollar. So I believe that continues. We can take a quick look at that. All right, and here is the pound priced in US dollars, and with the, I guess, some people indicating Brexit could be off again, we've had strengthening in the pound, back from a low of 1.2 pounds to the dollar, now up to about 1.235. So some serious strengthening there in the pound, in British pounds. Moving on. All right, and here we are, gold in Australian dollars. We all know that there's been some issues in Australia recently. Their currency has not been doing well. And the prior move broke out around 1900 and flew all the way to 2300. We're back at 2172. And, I think that would be like anywhere around 2100 would look like a pretty solid entry point if I had Australian dollars. Okay, now on quickly, here is a price of gold in euros, and as you might expect, There is a great big green candle as a result of Draghi's announcement that he's going to reinstitute easing. Let's take a look at that real quickly. The ECB to turn the stimulus taps up with indefinite bond buys. As you know, they already have negative interest rates, and there are economies are starting to fail in the European Union, go into recession, I should say. So they are going to pedal to the metal, start debasing their currency one more time. They cut basis points, they cut rates 10 basis points, which is, is not a significant amount, but they are signaling that sky's the limit for debasing the currency and dropping interest rates. I wonder how negative they can actually go into the future. And as you might expect, that has weakened the euro to the dollar. Look at this drop, 1.10 down to 1.095. I'm sorry, 1.102 down to 1.095. So serious loss of about 3 basis points almost. And that's probably why you're seeing the move in gold today. That may be why the markets are reignited, especially as the United States says, hey, that sounds good to us. We want to do that too. Matter of fact, we already are doing that. We're already buying back bonds again and manipulating the yield curve. That's what's going on in the EU. If I had my money in the euro, I would certainly be worried. Okay, guys, hold on. Okay, now on to a couple of thoughts. Here we are back in the United States, and with a look at the Dow Jones over the last 30 years or so. Yeah, we are definitely at the high end of the range. I was actually thinking about initiating a Dow short the other day, but I have not done it yet. We're tackling those old highs, but not much in the market has improved. It is just more Fed speak, more Trump tweet, more reckless spending, deficit spending. And the latest news, if you didn't catch it, is that Trump is calling for 0 interest rates or lower. 0 interest rates or lower. Now you really have to, that's unprecedented, that a president become that vocal over reckless monetary policy. But the fact that he is actually considering negative interest rates in the United States is really a game changer. So you have to say to yourself, will rates be going lower? And I think absolutely, because the Fed will continue to stimulate one way or another. They are currently buying U.S. bonds again. I'm not sure how long that will continue, and maybe they won't even announce a program, but they're back in there messing with the yield curve and everything to paint a rosy picture. They're trying to reduce the cost of borrowing so large corporations can borrow at 2%, buy their stock back, inflate the price of their stock, make a bunch of money on their stock options, and get that stock to go as high as possible, but it's a sugar high. So the question is, if we move back towards 0 interest rates, will that be inflationary? Will that stem off a recession or depression? I don't know. It's a really reckless policy, and as I've had many discussions in the comments of my videos, if you are older and if you have savings in the bank, you should be really upset right now that the only game in town is going to be a hyperinflated stock market. If you want to, take a negative return on your money, you can park it in the bank or with the government. But it's really an unsustainable path. And will it also bring inflation? Well, let's go ahead and take a look at inflation. Hold on. Okay, now I bet you thought I was going to go look at CPI. And CPI is tame, I think, right around 2%, but somewhat increasing. However, the real cost of doing business, at least in the United States, I see when I talk to small business owners, I was talking to my donut shop owner the other day, and she said after years and years, last month I didn't think we were going to make it. And that is just the cost of everything is spiraling up. The raw materials, the flour, the powdered sugar, the tariffs are making things worse in certain cases. I think I heard recently that we only, in terms of our economy, only about 14% of our economy is from making things. That would make, 86% of stuff is the service economy. Where do our things come from? They come from overseas, and, the tariffs are having a big impact on that. Luckily we do have quite a bit of food here, but the price of the food is going up. So what I have in front of you here is not the CPI going back to 1986. It's barely noticeable. But, compare the price of a Big Mac in 1986, and this is from the Big Mac Index. I've talked about this several times before. One of the true costs of inflation, because it captures both the cost of food and labor and rent, etc. Some people say it is a poor measure because it is not a broad enough measure. I would say nay. I would say it is exactly the measure you'd want to look at. And here is inflation over the last 30 years. I'm sorry, this graph stops in 2016, and I couldn't find one updated to 2019. But, there is the CPI that was cut off. I was going to say, this is what your Social Security checks are tied to. This is the CPI as reported by the government, and not a true measure of inflation in my opinion. This is the noted cost of a Big Mac sandwich in the United States over the same period of time, ending in 2016, up around $5.50, I believe. So what do you think the true cost of living in America is? This number down here or this number here? All right, well, I'll let you ponder that for a minute, but there's no wondering why gold is increasing. I mean, let's look at the gold chart. All right, here we are with about, about 30 years, and the price of gold looks similar to the Big Mac Index? Yeah, of course it does. And are Big Macs going to be dropping down to $2 anytime soon? No, they're going to be headed up to $6. So why would gold stick down here around $14.50 or $14.80? Why would gold go back to $1,100? Okay, why, when everything is becoming more expensive in the world? The only thing that competes for your dollars, the only thing that would possibly do better than gold would be the stock market. So let's take another look at the Dow. All right, so here's the Dow Jones, again up over 27,000, near an all-time high. But, all right, so has the Dow done better than gold over the last 30 years? Yes, it has. All right, not by that much, but it has done better. So the question is, do you buy in at Dow 27,000 and hope that it goes to 37,000, 47,000? I don't know, perhaps it will, but you know what? It is really poised to take a drop here. So if I had a choice between gold and silver and the Dow, and with silver and gold being near a low, and the Dow being at or near a high, I would say at this moment in time, ditch the Dow and look at your precious metals. I do not like the way this stock market looks right here, or the underlying fundamentals, but I do like the way gold and silver look. So I'll leave you with that parting shot. In a world of inflating currencies, of spending, where the president wants interest rates to go to zero and lower, a maniacal view of the markets. He wants to weaken the dollar, right? So he can inflate his way out of debt. But, debt only begets more debt and more crazy policy. It's the wrong thing to do. And I think eventually the businesses will start to suffer because people's incomes are not going to inflate to the sky. So, yeah, people are getting small wage increases now, but that's not going to help them to buy that $10 Big Mac when the time comes. It won't be that long. All right. So, my money would be on the precious metals here. If I were a betting man, I guess I am a little bit. I would certainly have some money in precious metals right here, hoping for a little more of a pullback in gold and silver. But man, what a great time to be in metals. Okay, guys, let me know your thoughts. Sorry for another long video. Talk to you later. And by the way, this is not investment advice. This is just my opinion. Take it and do what you will with it. All right, take care.